3 days ago, you weren't thinking about SpaceX, not about rockets or satellites or a share in a company you'd never touched. And then, sometime between yesterday morning and right now, something shifted. You opened your phone, you saw a ticker climbing, and you felt it. That small, electric pull in your chest that whispers, "Get in before it's gone." Here's what I want you to sit with. Nothing about the company changed in those 3 days. The rockets didn't get better overnight, the math didn't improve. The only thing that changed was inside your own head. And that change wasn't an accident. It was engineered. There's a number nobody put on your screen this morning. The whole machine was built so you'd never see it. I'll show it to you before this is over. The rocket is real. The urgency is manufactured. A max. I don't sell stocks, take a cut of what you buy, or tell you if SpaceX goes up or down. I'm here for the part nobody profits from explaining, what actually happened in your brain between yesterday and today. If understanding the machine instead of getting played by it sounds useful, subscribe. That's the whole pitch. So let me show you someone. Call him Jamie. 28, regular job, a brokerage app he opens maybe once a month. There's $3,200 in it. 2 index funds he set up 8 months ago and hasn't touched since. He's not reckless. He's not a gambler. On a normal morning, Jamie does nothing, which, for an investor, is usually the right move. But this isn't a normal morning. This is June 12th, and Jamie is watching 4 letters climb on a screen. SpaceX. And for the first time in 8 months, doing nothing feels unbearable. Hold on to Jamie. We're going to follow him. Picture a door. A big, heavy door, slowly swinging shut, and a crowd sprinting to get through before it closes. You don't even know what's on the other side. You just know the door is closing, and everyone's running. And something deep and old in you says, run too. That door is the feeling you woke up with this morning. And here's the thing about that door. It was painted onto the wall. There is no door. There's a company that will still exist next week, next month, next quarter, available to buy the whole time. But the painted door doesn't care about that. The painted door only has to make you run. Every part of what I'm about to show you is a brushstroke on that door. Here's the contradiction at the center of all this. And once you see it, you can't unsee it. The story everyone tells about an IPO is that it's your chance, finally, to get in early, to own a piece of the future before it takes off. That's the word that gets used. Early. But think about it. In SpaceX's case, the company spent 24 years privately owned. Insiders, venture funds, employees, they held this the whole time at prices you and I were never allowed to pay. The IPO is the moment they finally open a door to the public, which means you arrive last. Not early. Last. You're the last group invited to a party going 24 years, told to hurry because you're early. Let that sit. You're not getting in on the ground floor. You're arriving after the people who've been on it for 24 years. And it gets stranger. SpaceX didn't price small. Priced at $1.77 trillion. The largest public offering in the history of Wall Street. $75 billion raised in a single day. A number so large it stops meaning anything. And what did that gigantic number do to the crowd? It didn't scare them off. Pulled them in harder. The size of the number became the proof. It must be worth it. Look how big it is. That's the paradox. The thing that should make you slow down is the exact thing making everyone speed up. For the rest of this video, I'll take that engine apart, piece by piece, and show you every gear turning inside your head. Let's start with the feeling itself. The pull. You know it. It's not only about money, that's the trick. You've felt this exact pull before. When you opened a chat and everyone made plans without you. When you saw photos from a party you weren't at. A friend mentions a trip, a job, a thing they bought, and something in your stomach drops. Not because you wanted the thing specifically, but because you weren't part of it. That drop. That's the engine. And your brain runs the exact same program whether it's a party or a stock. In 2013, a researcher named Przybylski and colleagues named it and built a way to measure it. The fear of missing out. The key finding wasn't that people are greedy. It was that, in research on social exclusion, being left out can register less like a missed deal and more like real social pain. Sit with how strange that is. Your brain processes the trade not as a math problem, but as a threat of being left behind. And that's not stupidity. This is the part the gurus get wrong when they call you dumb for feeling it. For most of human history, being excluded from the group was a death sentence. The people who felt that sharp, panicky pull to stay with the herd survived. They passed it down to you. That pull is millions of years old, doing exactly what it evolved to do. The problem? It evolved for a savanna, and you're using it on the NASDAQ. So watch what it does to Jamie. He's not crunching SpaceX's revenue. He saw 3 things before 9 a.m. A guy from high school posted a screenshot. Got my SPCX allocation at 135. A finance account he half follows said historic. And his own screen was green and climbing. That's the whole input. In that moment, the $3,200 stops being savings and becomes a ticket. A ticket to being in the room with everyone who's apparently already inside, while Jamie stands outside with cold coffee. Here's the math he's not doing. If those funds returned a normal market year, call it 11%, his $3,200 made about $350. Boring. Invisible. No screenshot in it. But if he buys SPCX at the mid-morning price and the stock drifts back toward what analysts think it's worth, Jamie isn't down a little. He's down around $1,950, about 61% of what he put in. The fear of missing out on $350 in bragging rights talked him into risking almost $2,000. That's not a trade. That's a tax on loneliness. And here's how it shows up in real life. It's quiet. You're alone with your phone and a feeling. The fear isn't of losing money. The fear is of being the only one who didn't. That's the first brushstroke on the door. Now let's look at why your attention got hijacked in the first place. Out of every company on Earth, thousands of stocks, thousands of choices. Why this one? Why today? You already know the answer because the same thing happens to you. You don't research the whole market. Nobody can. Your brain takes a shortcut. It pays attention to whatever's loudest. The quiet ones, even if they're better, never get considered. 2 researchers, Barber and Odin, studied this in a paper with a title I love, All That Glitters. They found that individuals overwhelmingly buy stocks that grab attention, news, unusual volume, something dramatic. Big institutions have systems scanning everything at once. But you, Jamie, you've got a phone, a feed, and finite attention. And on June 12th, one company detonated across every feed at once and swallowed all the attention in the market. There wasn't room to consider anything else. There wasn't even room to consider nothing, usually the best option of all. Here's the uncomfortable part. The attention came first. The desire came second. Jamie didn't want SpaceX and then go find it. SpaceX found Jamie, and the wanting got manufactured after the fact. He didn't buy a rocket company. He bought a notification. And the noise wasn't an accident. Reports put more than $100 billion in retail orders into this thing. Robinhood, with tens of millions of customers, saw record traffic and reports of intermittent outages. And every story about the servers struggling became more noise, more proof this was the event. The attention fed itself. Now be honest with yourself. The last 5 things you seriously considered buying, the optional stuff. How many did you hunt for? Cold? And how many showed up first, loud and repeated until wanting them felt like your idea? That gap is the whole game. Your attention is the product. And whoever captures it gets to install the desire afterward. One thread to pull later. That morning pop, the jump from 135 to 161. It's not what it looks like. There's a second version of this story, about who's on the other side of your trade, and I'll tell it in full another time. For now, just file it away. The people cheering loudest about the pop are usually the ones selling into it. So that's 2 brushstrokes. The fear that pulls you, and the attention that points you. Next, what you're secretly hoping for, because it's not what you'd admit out loud. Let's be honest about what Jamie is actually buying, because it isn't what he'd say. Ask him out loud, and he'll tell you he believes in the mission. Rockets, Mars, satellites, the future. But that's not what his $3,200 is betting on. He's betting that this could be the one. The one that turns a little into a lot. The one he points at in 5 years and says, I was there. You know this bet. It's the same shape as a lottery ticket. You don't buy a lottery ticket because the expected return is good. It's terrible and you know it. You buy the daydream. Researchers Green and Huang studied this directly. They literally titled the work, IPOs as lotteries. Investors will pay a real premium for stocks with that lottery shape, a small chance of an enormous asymmetric jackpot. People don't just tolerate that bet. They'll overpay for the privilege of making it. And SpaceX was built, maybe not on purpose but perfectly, to be the ultimate lottery ticket. The rockets are the boring, profitable part. What lit the fuse is the artificial intelligence attached to it. The actual revenue in 2025 was about $18.7 billion, and the company still posted a net loss. But the dream is priced in the trillions. So Jamie isn't betting SpaceX is worth $1.77 trillion. He's betting it's worth 5. That's not an investment thesis. That's a lottery ticket with extra paperwork. And this isn't Jamie being foolish. We're wired to remember the one person who won big and forget the 1,000 who lost. The winner is loud. The losers are silent. So our sense of the odds gets bent permanently toward the daydream. Here's the way to catch yourself. When you think about an investment, what picture is in your head? Is it the realistic outcome, a modest gain, a slow grind? Or is it the screenshot, the imagine if? If you're picturing the jackpot instead of the average, you're not investing. You're buying a ticket wearing a suit. In real life, this is the gap between a Tuesday night fantasy and a Tuesday morning balance. The balance doesn't care how you feel. That's 3 brushstrokes. The fear, the attention, the jackpot dream. Now the cleverest one. The one that makes a wildly overpriced number feel reasonable. And it's where I finally show you the number I promised. Here's a question that sounds simple and isn't. How do you know if a price is good? You'd like to think you compare it to what the thing is worth. But that's almost never what your brain does. Your brain compares it to whatever number it saw first. That first number becomes the anchor. Tversky and Kahneman demonstrated this in 1974. It's one of the most reliable findings in all of behavioral science. Show someone any number, even a random one, and it drags their judgment toward it. It just has to be first. Now watch what the IPO machine did with that. SpaceX set its price at $135. The first public trade went off at $150. By the time Jamie ordered mid-morning, it was around $161. Those numbers are now his anchors. So if the stock dips to $140 tomorrow, Jamie feels relief. A discount. A deal. Here's the number nobody put on his screen. The one I promised you at the very start of this video. While Jamie bought at $161, the research firm Morningstar had already published its own modeled estimate of what a share is worth. Not the hype. Not the dream. Their sober, modeled fair value. $63. 63. Jamie paid $161 for something an independent analyst valued at 63. Not a small gap. He paid over 2.5 times the estimate. A drop of about 61% to reach 63. And the reason 63 feels insane right now is the anchor. You've spent this whole video swimming in 135s and 161s. That resistance you're feeling right now? That's the anchor working on you. In real time, nobody put a gun to Jamie's head. Nobody even lied to him. They just made sure he saw the big numbers first. And let his own brain do the rest. Nobody lied to you. Nobody had to. This runs your real life far beyond stocks. It's the price crossed out next to the sale price. Was 400, now 250. You don't ask if 250 is fair. You compare it to 400 and feel like you won. The anchor doesn't care. So now you've seen 4 brushstrokes, the fear, the attention, the jackpot, and the anchor that makes the overpriced feel cheap. The rocket is real. The urgency is manufactured. And the urgency is what costs you. There's one more gear and it closes the trap because it turns everyone else into the argument. You felt it this morning even if you didn't name it. The sense that everyone was doing this. When that many people move at once, you stop asking is this right and start asking how do I keep up? We call this herding. It's the same ancient wiring as the fear from the start, but pointed outward. When you don't know what to do, you copy the group because historically the group knew something you didn't. But markets invert this. When 100 people run toward something, the price has already moved. The crowd isn't your early warning. By the time the herd sees it, the people who got there first are turning to sell to them. And we have decades of data on how this ends, from the researcher finance just calls Mr. IPO J. Ritter. Here's what he found, and it should be printed on every brokerage app. Buy an IPO at its first day closing price like Jamie did, hold 3 years, and history says you trail the market. In Ritter's classic study, the first day close buyer earned about 34% over 3 years. Boring comparable companies earned about 62%, nearly double. The IPO buyer didn't lose in a vacuum. He left half his potential gains on the table to be in the exciting one. The crowd didn't get Jamie a better price. The crowd was the worst price. Run it on his 3,200. Herd versus boring market over 3 years, that historical gap is almost $900 he never sees. Not from a crash. From simply being in the loud thing instead of the quiet thing. And here's what the herd never shows you. The founder's shares are locked for a year, but those locks lift in stages. And when they do, the people who were actually early get their exit. The herd provides the door they walk out of. In real life, the herd is the restaurant with the line out front that turns out mediocre. The trend you bought right as it peaked. The crowd shows where things have been, not where they're going. The louder it is, the later you are. That's the fifth and final brushstroke. Fear, attention, jackpot, anchor, herd. 5 gears, all turning at once, all this morning. Now let me show you what they did to Jamie when they finished turning. It's 10 in the morning. Jamie taps the button. Market order, buy. No limit price, that would mean stopping to think. The door is closing and there's no time. $3,200. In. Filled at 161 a share. The exact moment his order fills, the Morningstar note valuing that share at 63 is already public. Already published. It was available before he tapped the button. He didn't read it. He wasn't hiding. It just was never put in front of him. And here's what I need you to understand about Jamie, because it's the whole point of this video. Jamie isn't stupid. He isn't reckless. He didn't get greedy in some moral failing way you get to feel superior about. He has a normal brain, the fear of missing out, the pull to the loud thing, the jackpot, the anchor, the herd. Every single one did exactly what it evolved to do. The machine didn't beat Jamie by being smarter than him. It beat him by knowing all of us. It was built, gear by gear, to turn ancient survival instincts into a market order before the thinking part of the brain clocks in. Jamie is not the cautionary character in someone else's story. Jamie is you on the morning the door looks like it's closing. Jamie is me on the wrong day if I'm not paying attention. The good news, and there is good news, is that a machine you can see is one you can stop. Let's talk about how. Now, before the exit, let me argue against myself. I'd be doing the exact thing I'm warning you about if I only showed one side. Maybe SpaceX really is worth $2 trillion. Maybe the AI thesis plays out. Starlink keeps printing. Starship rewrites the economics of orbit. 10 years out, $63 could look like a bargain. It's possible. Morningstar has been wrong before. Every analyst has. I'm not telling you the rocket fails, and I'm genuinely not telling you whether to buy. That's your call with your money. But notice, none of the bull case requires you to act today. A generational winner is still a winner next month. The thesis can be completely right and the urgency completely fake. Those two live happily side by side. The upside doesn't expire at the closing bell. Only the manufactured panic does. All right, you've seen the whole machine now. Let's talk about what you actually do with it, because awareness without a handle is just anxiety. First, when you feel the pull, that electric get in before it's gone, treat the feeling as the alarm. Not the signal to act. The signal to stop. The intensity of urgency is inversely related to how good the decision is. The ones with a countdown deserve questioning. Second, find the anchor and break it. Ask, what's the first number I saw, and is it doing my thinking for me? Then go looking on purpose for the quiet number. If a number makes your gut say that's too low, that might be your anchor working. Third, name the bet out loud. Say it plainly. I'm putting this in because I'm afraid of missing out, hoping it's a jackpot. If that sentence is true, you've learned something about yourself. The trade might be fine, but now you're making it, not the machine. And fourth, the simplest. Add a delay. A day. A week. The painted door is painted on a wall. It isn't going anywhere. If the opportunity survives you sleeping on it, it's real. If it can't, it was the door, not the opportunity. So, 3 days ago you weren't thinking about a rocket company. This morning you wanted one. Now you know every gear that turned in between. The fear that hijacks your savings and calls it belonging. The attention that points you and lets you believe you chose it. The jackpot dream in a costume. The first number that makes overpriced feel like a steal. And the crowd, really just the early ones leaving. None of it required you to be foolish. That's what I most want you to walk away with. Every one of those instincts kept your ancestors alive. You're not broken for feeling the pull. You'd be strange not to. The one mistake is letting a feeling that evolved on a savannah place a market order on the NASDAQ before you've had your coffee. The number nobody showed you this morning was 63. Now you've seen it. Next time a door looks like it's slamming shut and a crowd is sprinting through, you'll feel the pull. It's human. And then some quieter part of you will recognize the brushstrokes and remember, the rocket is real. The urgency is manufactured. Now you know the difference. A Max understand the machine, and it stops being able to run you. Subscribe and I'll see you in the next one.